GBP, USD. Bullish engulfing pattern signals market comeback. Prepare to see one of the market's surprising rebounds, where the GBP-USD pairing hints at a short-term rally thanks to a notable bullish engulfing pattern. But here's where things get interesting. This technical signal comes amid broader economic concerns that are shaping investor sentiment worldwide. Let's break down what's happening. The GBP-USD exchange rate recently experienced a sharp uptick. These signs are particularly significant because they influence the strength of the dollar, which in turn impacts the GBP-USD rate. Let's dive a little deeper into the economic backdrop. The slowing US economy is partly due to the impact of tariffs introduced during Donald Trump's administration. These tariffs are causing American companies to pause hiring and to adopt a wait-and-see approach, while waiting for more clarity on future trade policies. For instance, recent data from the Bureau of Labor Statistics reveal that in July, the US economy created only 73,000 jobs, substantially below the predicted 114,000. This downgrade signals underlying weaknesses in the job market, which investors interpret as a sign of economic softening. Of course, this isn't just about the numbers. It's also about the broader market psychology and the ripple effects of policy decisions and trade tensions. For example, Canada is also bracing for possible trade friction with the US after new tariffs were announced, illustrating how interconnected these economic issues are. Meanwhile, across the Atlantic, the European Union remains unimpressed by recent tariff negotiations with the US. The latest economic assessments suggest that the ongoing trade tensions are discouraging, not encouraging, economic growth in the region. Meanwhile, in the Antipodes, the Australian and New Zealand dollars are holding on to gains made Monday, partly buoyed by the US dollar's weakness after the bleak employment report. Investors are watching global data releases and central bank signals closely, trying to anticipate the next moves in currency markets. Further south, tensions are mounting in Switzerland over the impending deadline to finalize a trade agreement with the US. Without a deal, Switzerland faces hefty tariffs, potentially up to 39%. This kind of uncertainty adds fuel to the global growth and trade worries. And it's not just currencies. Precious metals like silver are also behaving cautiously, stabilizing around $37 as markets await further clarity from upcoming data and statements from central banks. Lastly, Asian headlines reveal that Japan's Prime Minister has expressed willingness to speak directly with President Trump to negotiate reducing US auto tariffs, highlighting how trade talks continue to be a critical focus for economies worldwide. All of these headlines underscore a complex picture. Markets are oscillating amid fears of slowing growth, geopolitical tensions, and policy uncertainties. The recent bullish pattern in GBP-USD might be just a short-term correction or a sign of shifting investor sentiment. Yet it's important to remember the overall economic climate remains quite fragile. What do you think? Will these technical signals translate into a sustained move, or is this just a temporary blip in a turbulent landscape? Share your thoughts and join the conversation. Has the market's narrative truly changed, or are we still caught in a cycle of uncertainty? Sterling's advance against dollar and euro. BOE policy announcement impact. Imagine this. The British pound is making a comeback, rising against both the dollar and the euro, all while the world watches and waits for the Bank of England's next move. But here's where it gets controversial. The pound's recent gains are just a tiny blip on the radar, and the bigger picture is far from rosy. Let's dive in. The British pound has been on a roller coaster ride, with a significant climb against the dollar on Monday. This uptick follows a Friday surge, all thanks to the US dollar's weakness after a disappointing jobs report. The focus now shifts to the Bank of England's upcoming policy announcement, which has traders on the edge of their seats. As of the latest update, The pound was trading at $1.3306 against the dollar, marking a 0.2% increase after a 0.6% gain on Friday. But don't get too excited just yet. The currency took a massive hit last month, plummeting by 3.8%. Its worst monthly performance since September 2022. Why the dramatic drop? Concerns over Britain's fiscal health and softer economic data have investors spooked. Kamal Sharma, a senior FX strategist at Bank of America, puts it bluntly. Narratives are often hard to shake, and the mood around the GBP has been gloomy for some time. And this is the part most people miss. The pound's struggles don't end there. Against the euro, the pound was up 0.3%, trading at 87 pence per euro. Just last week, it hit a low of 87.69 pence. Its weakest point since May 2023. Sharma believes the pound will bounce back by the year's end, predicting a strengthening against the euro as European data weakens and the European Central Bank cuts rates. But not everyone is so optimistic. Mohammed Al-Saraf, an FX strategist at Danske Bank, paints a more pessimistic picture. He expects the pound to drop to 89 pence per euro within the next year, citing the UK's economic weaknesses, particularly in the labour market. The relative growth outlook between the UK and the euro area is becoming increasingly negative for the pound, Al-Saraf warns. All eyes are now on the Bank of England's policy announcement on Thursday. Markets are betting on a 90% chance of a quarter-point rate cut, with traders anticipating 50 basis points of easing by year-end. With a rate cut almost a sure thing, currency traders are laser-focused on the outlook for interest rates and the central bank's plans for quantitative tightening. There's a glimmer of hope, though. If the BOE announces a slower pace of quantitative tightening and fewer sales of longer-dated gilts, it could be a boon for the pound. Chris Turner, head of research at ING, suggests that such a move could provide a positive surprise for sterling. So, what do you think? Will the pound continue its climb? Or is this just a temporary blip before another downturn? Share your thoughts in the comments below and let's spark a debate. Pound slides. Worst monthly loss since 2022 budget crisis. The pound is tumbling, and here's why everyone is paying attention. It's on track for its sharpest monthly drop against the US dollar since the chaos of the 2022 UK budget crisis, a period that sent shockwaves through financial markets. Is history repeating itself? On July 31st in London, currency traders watched as sterling slipped another 0.15%. to trade at $1.322. It also weakened against the euro, which climbed by 0.4% to 86.46 pence. In July alone, the pound has slumped 3.7%, its steepest monthly fall since September 2022, when economic turmoil under then Prime Minister Liz Truss triggered a record-breaking crash in UK financial assets. But here's where it gets controversial. Despite these setbacks, the pound is still nearly 6% higher against the dollar for the year so far. Just a few weeks ago, that gain was almost 10%. So, what's behind this dramatic reversal? Much of the answer lies stateside. The US Federal Reserve just wrapped up its two-day policy meeting, leaving interest rates unchanged, exactly as markets expected. What caught investors' attention, though, was Fed Chair Jerome Powell's refusal to hint at any imminent rate cuts. In contrast, data out of the US keeps defying expectations. Recent figures on economic growth and employment paint America's economic outlook in a much brighter light than Britain's. For the first time since April, the US Economic Surprise Index overtook the UK's version this week, reflecting stronger than expected results from America. These numbers matter because they shape how investors perceive each country's prospects and where they trust their money will be safest. And this is the part most people miss. While US interest rates are staying put for now, money markets are betting almost certainly on at least 2 more rate cuts from the Bank of England this year. and see little chance the Fed will do the same. This divergence is a big reason traders are losing faith in the pound and shifting funds elsewhere. Weekly data from the US Commodity Futures Trading Commission shows that speculative investors, once bullish on the pound for months running, are now neutral, clearly losing confidence. Analysts at Monex sum it up. Even in a week without major data releases, sterling has struggled, they noted. The combination of slowing US growth and nagging concerns over UK public finances means the pound may continue underperforming. We see little room for sterling to rally sustainably from current levels below $1.33. But is this fall in the pound a sign of deeper trouble for the UK, or a temporary swing in global markets? Optimists might argue that currency moves are often exaggerated by short-term speculation, but pessimists warn that persistent economic divergence between Britain and the US could spell longer-term problems. Where do you stand? Is the pound slide an overreaction or a wake-up call? Let us know your perspective in the comments. Debate strongly encouraged.